Today we're going to talk about valuing CrowdStrike stock, but before we get into that, I wanted to talk a little bit about the growing importance of cybersecurity. So these pictures I took in Moscow about 2 years ago, just before the Rona started, and I was visiting with tech startups there, and I had the opportunity to meet with this firm called Group IB. They're the most elite cybercrime fighting unit in the world, and the picture on the lower right, those gentlemen, they all had to take a lie detector test to work there because they spend their time infiltrating hacking groups to figure out what's going on the dark web and places like that. And their specialty is in threat intelligence, and they've conducted about 1,000 investigations into ransomware and returned clients about $300 million. If you're not familiar with ransomware, how that works is that hackers will infiltrate a company. They'll get a hold of somebody there and say, listen, we've managed to get a database of all your customer information, and if you don't give us $1 million in Bitcoin, which is not traceable, well, there's actually a firm that specializes in tracing Bitcoin now, but let's say any cryptocurrency, if you don't give us $1 million, then you'll be on the front page of the Wall Street Journal tomorrow. And it's very tempting for firms to sweep that under the carpet, pay the $1 million, and go about their business. As a matter of fact, ransomware is probably underrepresented for that reason, that a lot of the attacks aren't known because they just sweep them under the carpet. So 90% now of all cyber crimes in the world involve money theft. That's part of the benefits brought to us by cryptocurrencies and the Web 3.0 narrative. So cybersecurity is becoming increasingly important now to firms of all sizes in every industry. It's not a nice to have, it's a must have. And it's quite a mature theme. So you would probably remember names like Symantec or Norton or McAfee. As a matter of fact, this gentleman you see here on the right-hand side with these ladies, that's John McAfee. He's quite a legend, and this is a video that he did talking about how to uninstall McAfee's antivirus software. It's notorious for creating problems on people's computers. He's quite a hilarious individual. This is worth watching. But the cybersecurity theme was reinvigorated by the emergence of artificial intelligence, and we've covered firms like Darktrace, SentinelOne, and CrowdStrike way before they were publicly traded firms. They're all now stocks that you can purchase. And in looking at this theme, we started by evaluating ETFs because it's a very mature theme, and rather than try to cherry pick a winner, we figured we'd just find the best ETF, which we believe is the Global X Cybersecurity ETF, and simply invest in that. Well, as our methodology evolved, we decided that we weren't going to hold ETFs and forced ourselves to find stock alternatives instead. So we sold the Global X Cybersecurity ETF and picked up shares of a firm called Okta, which does something called zero trust. Essentially, they assume that everybody in an organization is a bad actor, and they start there. So they don't trust anybody. That's the label zero trust. So here on the right-hand side, you can see they were recently hacked. We wrote about this, evaluated the scenario and whatnot. But if you're a cybersecurity firm and you get hacked, that doesn't look very good at all. And when you're investing in this space, you have to realize that events like that can happen at any time and decimate the value of your shares. Now, when it comes to access management and zero trust, Okta is a leader in that space. You can see the magic quadrant here on the left. ForgeRock and Ping Identity that also appear there, they've both been acquired by private equity firms. So there's a lot of investment going into cybersecurity, and zero trust, we believe, is the way forward, and that's why we're long Okta. Now, this cartoon here, Dilbert cartoon, is a great example of how cybersecurity policies in a firm are always a balancing act between usability and security. And that's why it's there's a growing push towards sort of passive checking that you may not even notice what's happening. So for example, if your screen goes dead and you wake it up with your mouse, that little jiggle you do with your hand, everybody does that uniquely. So that little jiggle changes, hey, maybe that's not the person that we're expecting who's waking up the screen, just as an example. So when we looked at getting more cybersecurity exposure, we had looked at the biggest cybersecurity stocks. We discovered which ones those were by evaluating the top 10 stocks in the 4 biggest cybersecurity ETFs you can see here on the lower left. And the names that came up by a long shot would be CrowdStrike, Palo Alto Networks, and Fortinet. And the table on the lower right here shows you their growth rates and valuation ratios. As you would expect, the higher growth, the higher valuation. So when we had looked at these firms, this was in April of last year, we really liked CrowdStrike, but found it to be too richly valued. Things we liked, first of all, CTOs don't like to cobble together cybersecurity solutions and hope everything plays well together. They would much rather have a single point of contact and a holistic solution that covers all the bases. That's what CrowdStrike brings to the table. A Forrester study, it was commissioned by CrowdStrike, but I'm sure it contains some truth in it, shows the return on investment for purchasing a holistic solution like that with a payback that's measured in months. So this is probably an easy sell at the C level. CrowdStrike's one of the largest cybersecurity firms, as we mentioned. They have close to 80% gross margins, $2.3 billion in cash, and a burn rate of about $50 million a quarter right now. So survivability is not going to be an issue. They utilize an attractive SaaS business model. It sits on our size sweet spot with a $32 billion market cap. And they take a modular approach, which is similar to Salesforce. We'll talk about that in a second. Their quarterly earnings decks present metrics very nice, key metrics, easy to follow. International revenues have been consistently growing over time, representing 28% of total revenues in 2021. And just in the overall cybersecurity space, private equity firms have been scooping up cybersecurity firms. KnowBe4, Ping Identity, ForgeRock, and Darktrace, though that actually fell through. And this helps provide some level of price support. So when we look at firms that we'd like to add to our portfolio, we consider size fit. And this diagram at the top here shows you how our sweet spot would be firms that fall within a $10 billion to $100 billion market cap. And then below that, you can see how we're actually underweight that size category. That just happens to be where we're sitting right now. That's why we'd like to focus on, if we're going to be adding firms, we'd like to add large firms. And on the right of that, you can see our category weightings. And we're also underweight computing, which is the category that cybersecurity falls into. So CrowdStrike is attractive from all angles. Now, when you look at how the firm describes themselves, they do this parallel with Salesforce dominating CRM, and they believe they can dominate cybersecurity. And they have a modular approach, and you can see that close to 60% of their customers are purchasing 5 or more modules. So you can pay attention to these buckets over time. And when they talk about modules, here you can see what that looks like. And each module has a total addressable market, and then they add up on this bridge that you can see and total $58 billion. And of course, that grows over time to $70 billion by 2024. And the modules here, what's interesting is that you can then make acquisitions and start plugging in additional modules. That's what they've done with Humio. They acquired them and added log management capabilities. So their total addressable market then becomes bigger as they're able to add more functionality, and that makes it easy to upsell customers. Here you can see this beautiful chart. All SaaS firms should have a chart that looks like this. Here you can see net retention rate reflected on the top. It's above the 120% benchmark. Frankly, that's about average for SaaS firms. And then on the bottom there, this is beautiful. Most SaaS firms don't tell you what their gross retention rate is. That reflects cancels. And here you can see that nice trend over time to above 98%. That's beautiful. So the SaaS metrics for CrowdStrike are quite nice. And when you look at their TAM evolution, you can see when they first had their IPO in 2019, it was $25 billion, how it's grown since then. But what I particularly like is the difference here between the $71 billion TAM in 2024 and how they expect that to expand from organic TAM growth, that's just the market growing, their product roadmap, whether that's acquisitions they make or new products they're developing, future initiatives, and additional opportunities. So, even if the TAM was half that size, it's quite compelling. And I think the overall cybersecurity space is somewhere around $150 to $250 billion TAM. So they're in line there in terms of their estimates. But look at this slide here and this beautiful growth. You can see their annual recurring revenues are at around $2.1 billion. So they've just started to get their toes wet. They have this nice, beautiful growth. And when you look at their customer penetration, they have 25% of the global 2,000, 15 of the 20 top banks, just over half of the Fortune 500. So there's still room to grow there. And then when they get a customer, they can upsell them. So there's a lot of potential for the firm. But what we wanted to focus on was setting a valuation target. Now, if we use Snowflake as an example, we observed that their ratio very occasionally dipped below 20 over time. So that's the target that we set, and we were actually able to pick up some shares of Snowflake below that valuation. What's interesting is if you look at their 52-week low, if you look at price, it won't reflect that. So their 52-week low still had a simple valuation ratio that was above 20. And I'll put a link in the description of this video with an article that describes why we came up with the simple valuation ratio and why it's particularly useful. But if you set targets for a stock, it's much better to use a ratio than a price target. So the question here is, what valuation ratio do we set for CrowdStrike? Well, we can look at relative valuation, and that's on the right-hand side here, we've taken the 15 top SaaS firms out there and calculated the simple valuation ratio. You can see, of course, Snowflake is quite rich. These days it's trading above 20 at 24. CrowdStrike has always been rich, though it's dropped quite a bit. And on the lower left here, you can see the simple valuation ratio calculated for all cybersecurity stocks in our tech stock catalog, and CrowdStrike is the most richly priced of them all. And when you look at their price chart for as long as they've been trading, that blue arrow on the left shows when prices dipped because of the market corrected. It was in March of 2020. That was the pandemic reaction. On the right, you can see that red arrow. That was a recent 52-week low for CrowdStrike. And what's interesting is this. So the last time we looked at CrowdStrike, the simple valuation ratio, that's what SVR stands for, was above 40. When the Rona crashed the markets, the price of CrowdStrike shares fell to $39.55. At that time, the SVR was 12.5. Well, just recently, shares traded at a 52-week low of $120.50 a share. That translated to a simple valuation ratio that's almost the same. So we can conclude, just based on that evidence, that anything below 13 is fair value, at least based on historical valuation. So if we look at the coming earnings, that would be on the 29th in 4 days, the midpoint of their guidance is around $572.5 million. So you can see how that would affect the valuation ratio. It drops at about 1 point. So just based on the analysis that we've conducted today, we'd consider buying CrowdStrike at a simple valuation ratio of 15 or less. So to conclude, this is a leading cybersecurity firm with a SaaS business model that shows very healthy metrics. Shares seem reasonably valued at a simple valuation ratio of 15 or less, with 12 to 13 representing those historical lows that we've seen. Of course, the market is still in a bear, and the falling tide lowers all ships. So there's nothing that says this couldn't dump dramatically if the market does the same. But we may look to accumulate shares of CrowdSource following their coming earnings call. We always like to wait until the dust settles after earnings prior to adding shares, because when you have a high-performing firm, it seems more likely that they'll upset the market than they will reward the market, though I think over the last 4 earnings calls they've surprised. But If shares never trade at our target valuation, we're also perfectly fine with that. You have to make rules and adhere to them. So let us know what you think about the simple valuation ratio target we've set for CrowdStrike, what your thoughts are on valuation. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this video today.